Okay, welcome back. In this video, we are going to study about fixed cost and variable cost. Here, in this video, we are going to discuss about fixed cost versus variable cost. Please, please look at the words fixed, variable. Fixed means constant. No, constant. If the graph is like that. If the x-axis changes, if even though the x-axis changes, the y-axis real constant. For example, 10. This is the fixed no constant. This is the really fixed. For variable cost means if the graph changes, if the graph changes according to cost according to cost, that is variable cost. That is the meaning. Fixed cost mean no change. If the cost change, that is variable cost. Okay. Now uh, the 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 fixed cost is independent of output level. What is the meaning of independent of output level? For an example, please assume that I am a owner of a hotel. Okay, uh, I am owner of a hotel. Now, uh, uh, I have to I have to there are I have to pay money for something. For example, to rent of the hotel. Even though please assume that I have hotel uh, in this month. For example, for June in June, I own for example today. Okay, today I only make about 1,000 rotis only. Okay, in tomorrow. Uh, on tomorrow I will make about 10,000 roti. Okay, but the but if you but even if if I make 10 roti or 10,000 roti, 10 legs roti, it is not matter about fixed cost, because the fixed cost is independent of output level. For example, if I my hot if I'm a hotel owner, the if, for example, I rent a hotel from I get a hotel for rent. Therefore, I have to pay rent for the hotel owner or landowner. Okay, no, uh, they will not consider about how much I earn. He will not care about how much I earn and how much roti or how much how food I made. He only want a monthly rent, fixed monthly rent. For example, 50,000 rupees for month or 60,000 rupees per month. That is the fixed cost. For example, rent, interest, in the loan interest, permanent salaries. I have to give permanent salaries. If there are any permanent employees, uh, I have to pay permanent salaries for them. Even though for example, in this month for next month for the June month, for example, consider that I will not open my hotel for 1 month next month, but I have to pay rent. I have to pay rent. I have to pay tax. I have to pay rent. I have to pay tax. I have to pay loan. I have to pay permanent salaries. I have to pay insurance. Uh, I have to pay property taxes. Property taxes. If I have any big property, I have to pay for property tax. Uh, I have to pay for equipment leases. Leases means in Tamil kuttagai, in Sinhala, I think Badu Dime. I don't know Sinhala, I think Badu Dime. Uh, okay, that is the fixed cost. They independent of output level. They will not consider about how much I earn from the business. Even though I am hotel owner, these expenses will not consider about my income. I have to pay even if I open the if if I open the hotel also I have to pay. If I didn't open for 1 year also I have to pay loan and other loan tax interest loan interest EMA like that. Okay, that is the fixed was independent of output level. Okay, stays the same. Please read the slide. Stays the same whether output is zero or at maximum capacity. If I don't prepare any food also, earn if I earn anything, I only earn 0 rupees also. I have to pay rent. If I earn 10 lakhs also or 10 crores also, I have to pay rent. Rent same rent. If I earn 0 rupees also, I have to pay 50,000 rent. If I earn 10 crores also, I have to pay 50,000 rupees. Okay, fixed cost like that. Other expense also like that. Here, this fixed cost is called supplementary cost or overhead cost because my purpose is preparing roti, making food and selling. No, here rent takes rent takes interest rate, loan, uh, equipment leases, property taxes. They are supplementary, not the main supplementary cost. Therefore, fixed cost is called supplementary cost or overhead cost. Supplementary, supplementary cost or overhead cost. But in uh, variable cost, now we can discuss about variable cost. Variable cost means changes directly with output. For example, I have to make 10 roti. Therefore, for example, I need about 1 kilogram flour. If I want to make 10,000 roti, I want about, for example, 10,000 kilogram or 1,000 kilogram flour. That is the variable cost. The variable cost will change according to our output. If I want to make 10 roti, I want just a few flour. I want to if I want to um, if I want to make a lot of roti, I have to buy many 20 kilogram, 30 kilogram flour. That is the variable cost. Which will be directly changed. It will be directly changed with output. That is the output rises when output rises increases when output increases. For 10 roti, only 10 kilogram, for example. For 1,000 roti, we want 1,000 rupees. That is the variable output. That is the meaning of variable cost. Okay. Here, the variable cost is called that prime cost or direct cost because our main purpose is making roti. No, therefore, our main cost is making roti. Therefore, we have to buy flour. We have to buy oil. We have to buy gas. Therefore, according to our output, it will change. Therefore, our main purpose is making roti. No, therefore we have to spend some money for our main purpose. Therefore, that is prime. That is called prime cost or direct cost. For example, raw material, wages. Wages means if there are, for example, there are some employees, they will not come every day. If they come, if they come to my hotel, I have to pay salary for them. I don't need to pay salary for every month like permanent salary. If it is permanent salary, that is fixed cost. If there are some works, for example, uh, a cleaner will come to my hotel every once a week. Okay, only he will come every Monday. Therefore, I have to pay him for every Monday for the 1,000 rupees. If I close the shop, he will not come. I don't need to pay money. That is the variable cost. Raw material, casual wages, fuel. For example, if I open the hotel, sometimes I have to I have to, for example, in my hotel I offer free delivery. Okay, now if I open the hotel, sometimes I will get many orders, therefore I have to spend a lot of fuel for free delivery. But if I close the hotel, I don't need to spend. I don't need to spend my fuel. I don't need to pay money for fuel. That is variable cost. Okay. Here in fixed cost, the variable we can discuss. Fixed cost will be, don't consider about this graph. Okay. Uh, uh, Fixed cost will be like constant. Variable cost will be variable cost will be increase with output. Fixed cost fixed cost will be constant according to unit output. According to output, for example, according to output, the cost in fixed cost will not be changed. We have already discussed same. For example, fixed cost is one leg per month. One leg per month. Okay, one leg per month. Uh, but variable cost will be increased according to output. Output versus cost. If I if I increase the output of rotis, 1,000 rupees, rotis, 10,000 rupees, I have to, the cost will be increased according to fuel, gas, flow, like that. That is very simple. Okay, there is a real small example. uh, I am riding car. I am using car for my hotel. If I if I use my car, I have to spend money for fuel. But I don't need, if I don't drive the car for 1 month, I don't need to spend money for fuel. But I have to pay loan. Even though I don't drive, I have to pay loan. I have to pay insurance for that month. If I don't drive the car for 1 year also, I must pay insurance loan. That is very simple. Okay. Therefore, insurance loan EMI are fixed cost. I must pay every month. They will consider about whether I drive or not. But variable cost, if I flu- uh, fluid fuel is variable cost, because if I drive, I have to spend money for fuel. Otherwise, I don't need to pay, pay money for that. Total cost means, here, please here this refer this equation. Total cost is equal to total fixed cost plus total variable cost. This is very simple. Total cost is equal to total fixed cost. For example, insurance, loan, interest, like that. Plus total variable cost according to our output, fuel cost, flow cost, gas cost, like that. That is the total cost. It is very simple now. Now we get fixed cost. Now we are going to discuss about fixed cost versus variable cost. Here in fixed cost is independent of output. We already discussed about independent of output. For example, rent. Variable cost is directly related to output. If it will change according to my output. I want, we already discussed. If I want to 10,000, if I want 10,000 roti, I want a specific level of flow is like that. It will it decrease. The required amount will be increased according to our output. That is already discussed. Uh, we already, according to our here, supplementary cost or overhead cost. The fixed cost will be called supplementary cost or overhead cost. For example, secondary cost. Uh, our main purpose is hotel, making roti, selling roti. But we have to pay for tax. We have to pay tax and other thing, rent. That is supplementary, secondary cost. But if I want to make roti, I have to buy flow gas. That the primary direct cost, primary main cost. Okay. Uh, Value at zero output, which means I don't make any roti for 1 month, but I have to. but it will be same. Fixed cost will not be changed. But if I don't make any roti for one month, if I could host the hotel for one month, I don't need to spend for money for any gas or floor like that is example. Rent, insurance, fixed salaries, variable cost, raw material, casual wages, fuel. The very simple, no. Okay, we have finished the all discussions about micro versus macro, final versus intermediate goods, free market versus command market, quantity demanded versus demand. Finally, we discussed about five fixed versus variable cost. If you want, you can. We already discussed about this. If you want, you can please refer this. We have already deeply discussed about this. Therefore, I don't need to discuss about again. Therefore, I stop this video now. We can discuss about another session in next video. Okay, bye.